All right, guys, we are here today. Honestly, Nvidia all the way up to almost 120s this morning. The SPY's been getting really close to lifetime highs. So the SPY is really kind of right around lifetime highs here. If the SPY breaks 565, that's lifetime highs. Right around it, at least. You can see this light yellow line right here. Lifetime highs are right here. So, I mean, the SPY could certainly break that today if Nvidia gets on like a good little run or something like that. Nvidia could, Nvidia could move the market up in sympathy. We do have Michigan consumer sentiment data dropping today. It's later on at 10 a.m., so it's a little bit later on this morning. But that does drop this morning. And, yeah. Oh. I got this Nike hat. I don't know if I'm... Yeah, we'll just wear it backwards. Yeah, look at the SPY. It's a big, GameStop still holding at least. We did have some stuff falling down today that people mentioned. Boeing, BA, gapping down a significant amount down to 150s. It's almost to the point where I might think about buying it. Who's sick? RH? Who's that? Oh, we got Michigan consumer sentiment data. We also have import-export prices at 8:30. But nothing really big, to be honest, today. Let me see about next week. Yeah. Next week, we got retail sales, Empire State, FOMC meeting, jobless claims, Philly Fed Index. So, yeah. So next week's busy, and then the week after that, we got like manufacturing and services PMI data, CB consumer confidence data. We got like the case shiller. Checking on the week after that. Oh, next week, the week after that, we got GDP data and PCE data. So, yeah, busy time. When does earnings season start again? I'm checking everything. Like, I think mostly all of earnings are done for this season. You'll be able to tell. You can always kind of track Tesla. But yeah, Boeing is down big on some news here this morning. Yeah, so Boeing machinists are going on strike. So workers are going to strike following contract rejection, and that's dragging Boeing down. You can see that news right here. Like, that's the Boeing news right there. So yeah, Boeing gapping down a significant amount this morning. Also, hey, what's up, Tiny? Good morning. Happy Friday. Is gold breaking lifetime highs? I know it was yesterday. Yeah, so gold got up to 2,600 earlier this morning. Gold broke lifetime highs if you look at gold. But yeah, Boeing is down on that contract news. Here's the new lifetime highs for gold up there at 2,601. Oh, Robinhood. Yeah, Robinhood. I know RH is Restoration Hardware. I don't know anything about that. I thought you were talking about Robinhood. Robinhood is just hood. Alright, and yeah, so gold going to 3K, maybe, possible. Yeah, I'm trying to see when earnings seasons start again. I think they'll probably be in October sometime, right? Yeah, so late October, mid to late October is when earnings season starts. So we got about a month for that, which I'm okay with. I don't mind, Adobe down big after earnings. Yeah, so here's Adobe. Adobe is down big, man. Wow. Adobe's had a good year, though. Would you buy Boeing? I mean, I probably would, but I think there's risks. It's not risk-free, of course. Like, I probably would just because it's down so much, but I don't know. The other part of me thinks that if you look at the last year, it's been super volatile, right? Like, it was at 267s to start the year. It's fallen all the way down to 150s, but it's low of the last few years. Like in 2022, Boeing was at $113 a share, so I still think it's incredibly risky. So I might buy it, but I definitely don't think it's a risk-free trade or anything like that. You know. Yeah, so earnings season kind of starts first couple weeks in October. Hey, what's up, Daphne? Good morning. Yeah, Adobe ended up having earnings. And again, they did not react positively to him. Adobe posted quarter 3 adjusted EPS 465, beat 453 estimates. Sales beat expectations as well at 5.41 billion. So here's the Adobe numbers. They must have seen something they didn't like, though. Cash flow from operations were 2.02 billion. So sales rise, AI demand remained strong, third quarter profit was good. It beats forecasts for August quarter. Record quarter 3 revenue and EPS beat as well. Fiscal non-GAAP earnings, revenue rises. They repurchased 5.2 million shares in fiscal quarter 3. But they projected lower than expected fourth quarter guidance is really why Adobe is down. So Adobe projected lower guidance than expected, and that's what they're dropping down from. So interesting, yeah. Yeah, so another green day yesterday. Oh yeah, people are still spending for sure. You know, spending's not, GDP's still growing here. It was at 3% last time. So we still have decent GDP growth here. It's just an election year, you know what I mean? And you got to to put it into perspective, guys, anytime we have an election year, you have to understand that politicians are going to push you in all these different directions. It's normal. Other people who kind of, root for those politicians might also kind of regurgitate the same stuff back to you. In the end, things are not perfect. Inflation has gone up a lot, but the U.S. is still spending. Unemployment's under 5. It's at under 4.5. It's like 4.2, 4.1 or something %. So it's still relatively low. And again, I'm not saying things are perfect. I say this sometimes and people get upset with me. But I'm not saying things are perfect, things are rosy. I'm just saying that it's not like an end of the world scenario. And you gotta, again, what do you guys think is more probable? All right, serious question. What do you guys think is more probable? That it's an end of the world scenario that has very, very rarely happened in markets? Or politicians might be embellishing the current state of the economy to try to get you to vote for their side, right? What do you think is more probable? And so, yeah. Again, maybe it could be just, to be fair, maybe this is all confirmation bias by me, right? Maybe I just don't want the world to fall apart. And so I overlook the red flags of it. Maybe that's true too. I don't know. I don't see it right now. I don't see it. And honestly, I'm probably not in the majority where I'm okay if we hit a little mini recession. I'm okay if we hit a little mini recession. I think that markets are up a lot. I think the economy has been overheated for years now. And I think we need to bring everything back down to earth a little bit in regards to pricing. And the only way to really do that historically is recessions, Yeah, it might be a little pinch of both. Is odds of a 50 cut almost even now? Really? I think that's a horrible idea for 50. Oh my goodness, it is. 57 to 43. The odds are almost flat here. That's crazy. Unnecessary. We should never cut 50 basis points right off the bat, I think. Personally. I think it's going to scare people. I think if we do this side, the chance that we're going to negatively react to the rate decision next Wednesday is much, much, much higher. If we do that, the chance of a negative reaction to the rate decision is much, much, much higher. Well, yesterday it was like 75-25, you know. So the percentage has changed a lot. You know, I'm not sure what made it change. Yesterday we did have PPI inflation. I own a service-based business. I would disagree that people are spending. Right, but Ed, I mean, and it's all good here, but you're taking your own, like, I guess what you're experiencing is not necessarily a broad reflection of everything, right? Like, you could experience that, but everybody else could be spending, right? Like, I guess the point is you have to look at GDP, right? GDP is still 3%. And I think you got to look at it in that regard. We can't, like, anybody, I could say, hey, guys, you know, I chose not to spend much this week, so that must mean people are not spending as much. But is that a real accurate gauge of spending? No, it's not. You know, that's super. Man, I'm for whatever reason I'm having trouble thinking of the word. But yeah. And again, like, so I'm not saying things are perfect, guys. Like, I think people hear me say this and, like, they're so used to, like, going back and forth about, like, everything that they get upset with me. I understand things are not perfect, but the real reason people are unhappy, if people are pinching their pennies and saving, it's probably because the amount that they have to pay in regards to bills, the inflation has risen. Inflation has risen so dramatically over 5 years, right? So that's the real reason people are unhappy, is prices are obscenely high. They're much higher. Again, 100K used to mean something, guys. Like $100,000 a year used to mean something. Now it's not that much. And like I said yesterday, I'm sure when I say this, some people that make around 100K who have been kind of walking around acting like it's some big flex, that might kind of hurt to hear. That 100K is not as big of a flex as you think it is at this point in time. And so what does that mean? That means that inflation has gotten to an unsustainable level over the last 5 years, and the only way to combat that is to maintain a high interest rate environment, which is why I'm so against rate cuts. Like, I'm not, like, 25 is fine, but cutting 50 out the gate and continuing to be aggressive with rate cuts is going to make people more unhappy. You know, why do you think people are pinching their pennies? Is because prices are so freaking crazy. And pandering to real estate and lending by lowering interest rates is only going to make that worse, not better. And that's what I think a lot of people don't understand. They're having people telling them that rate cuts are going to solve everything, when rate cuts are going to make prices increase, not decrease. You know, that's the first thing you got to understand, is that rate cuts are going to make prices go up, not down. What's up, Sam? Yeah, I get it. It's tough, but again, like, I guess the point is here. Yeah, let me turn the music down. I think the music for me is a little bit too loud. So I guess the point is, like, you have to be, if you want to take advantage of, like, so post 2020, I've gone over this 1,000 times, but post 2020, the Federal Reserve stimulated the economy, right? They lowered interest rates. They did QE. They sent out stimulus checks. They stimulated the economy in that regard. And so the consequence of that is inflation. Inflation rose dramatically. CPI went up to almost 10%. PCE was like almost 6%. Inflation went up dramatically for everybody. And so if people want to take advantage of that, the hot economy that we got post 2020, they have to be able to take advantage of the necessary corrections in those hot economies, right? And so I guess the point is, if people are not spending, good. Honestly, we have to be able to not spend for a period of time. Like, we can't just pander to those people and say, hey, let's bring interest rates down again and make everybody's problems much, much worse by spiking inflation again, especially not doing any more. I don't think we should ever, not ever is a strong word. I definitely don't want us to print more money and do more QE and do more, I certainly don't want that. Because that'll make it really, really worse. And you could argue that the inflation that we got post-2020 was from the QE in the first place, which is probably true. But it's also from the low interest rate environment. And so if people want to take advantage of the hot economy, they have to be willing to deal with the corrections that happen from it, because it's not just going to go straight up. And if it did, nobody would be able to afford anything very, very quickly. And so, I guess the point is, I don't wish unhappiness on anybody. Number one, we're not in a period where the economy looks like it's necessarily breaking. One low payroll report doesn't signal that, unfortunately. We're in a period of time where we need to let things correct. We can let house prices correct. We can let inflation correct. And to me, I think it's necessary. But again, I'm biased in my own way for my own reasons, regarding my own situation, of course. Like, I'm biased for sure. But I just think that we have to, we gotta let things correct sometimes without stimulating the economy and trying to make it, trying to make us always in a great spot for everybody. It's just not feasible. It's not sustainable. The car market's not failing, though, Ed. It's correcting, brother. Okay, so again, post 2020 interest rates were brought down to zero. The Fed did QE. QE is money printing through creating bank reserves and then using those bank reserves to buy financial assets. What it does is it injects liquidity into those markets, influences the price of bonds and other assets, and ultimately allows banks to lower interest rates to consumers, right? That's what QE is. That's what we did post 2020 to try to save us from the weakness that we got from the pandemic, right? Lockdowns, everybody was home, so we had to, the Fed stepped in and stimulated the economy in that way post 2020. Once inflation, the consequence of that behavior is inflation. If you look at CPI inflation, right? If we look at a CPI graph, the consequence of that behavior is inflation, right? So what did we get? And this is the real reason. You want to know why everybody's really unhappy? This right here. That right there. Look at that spike. That spike is bigger than anything we've seen in inflation over the last 25 years. That is why people are unhappy right now. Don't get it twisted into thinking that people are unhappy because the economy's weak and like they're just struggling. No, people are unhappy because prices are freaking obscene. That's why, and the way to combat that is not rate cuts. The way to combat that is high rates, not low rates. But this is why. You can see 2020 happened here. They brought rates down. They printed money here. And then the consequence was almost 10% inflation. And so to correct this behavior here, the Fed maintained a restrictive monetary policy afterwards. They did QT, which is the opposite of QE, and they kept interest rates high. And this affected the car market. We're talking about the car market, so this affected the automobile market. If anybody remembers, like, prices for cars over the last 3 years, they spiked up to obscenely ridiculous levels. Like, they spiked up to where you could buy a used 2005 Toyota Tacoma. It's 30 grand for a little bit. New cars were obscenely high priced. And so car prices were in a bubble. And again, I don't know if we can call it a crash or a failing car market to see that bubble correct, which again is necessary. It's necessary. You know, like it doesn't mean anything if you make a lot of money if a car costs 200 grand. You know, it doesn't mean anything. And so you should want these things to correct. It doesn't mean they're failing. It means they are correcting from unreasonably high levels to begin with that we got. You know, as the Fed maintained a restrictive monetary policy, they raised interest rates. And by raising interest rates, they did a bunch of rate hikes. They raised the federal funds rate. The consequence of that is, you know, interest rates everywhere go up, including mortgages. Mortgage interest rates are up, you know. And again, that can cause this kind of bubble in automobiles that needed to correct. It needed to come down. So I hope that all makes sense, right? Like, I guess the point is, like, if something goes like this, if the graph looks like this and then goes like this, does this mean it's failing? No, it means it's correcting because it's up too much in the first place. You know, and I think that's how the lens people have to look at the real estate market under. They got to look at the automobile market under it, all that stuff, you know. Yeah, the economy might be slowing. That's all right. Well, I'm sure a lot of people like the stimulus checks. I remember I got stimulus checks at the time. You know, I don't think I'd qualify for them now, but at the time I did. Yeah, because they gave stimulus checks to anybody making like under 200K a year or something like that. I don't remember what the level was, but I remember I got stimulus checks at the time. This was like, you know, and I was happy to have it. But again, you got to look at it objectively and understand, like, a lot of people feared it at the time too, but the consequence was inflation. Inflation, you know, people started buying stuff with it. Rolex prices doubled. So yeah, well, certainly don't need them anymore, right? Like that was like, you know, we were having a very unique situation at the time, right? And people like to blame politicians and all this stuff for it, but to be honest, nobody could, like, we were in the middle of a crazy event across the world, right? And so people like to blame and play the blame game for that type of stuff, but we can't really blame anybody, I think, and for that type of stuff, right? Like that, we saw stuff like that has happened throughout our history of the world. You know, it happened in the early 1900s with the flu thing, you know, and so we experienced another one, and it affected everything in the economy. It caused some inflation, like problems happened from it, but you know, and maybe some people made some bad decisions, right? But I don't think we can blame everything on anybody. I think it's just kind of, it's a bad time in the world, you know. All right, guys. So yeah, next week is a huge week. It's probably the biggest FOMC decision we've had in years. Is next Wednesday. That's a massive decision. The biggest FOMC decision that we've had in years is Wednesday. So. Right. Like this drone show that they did, it's really cool, man. That's crazy.
On everything from.
Sorry, I'm looking at one of the Polaris
things. These steps that are necessary.
Let me do a poll here. I don't think I've done one yet. All right, guys. So we're gonna do a poll. And the question on the poll is: do you consider the economy weak currently? Or how about this? Do you think rate cuts are a good idea? That's probably the better one because that'll influence if you understand economics. So yeah, again, we do have the SPY. The SPY is very close to lifetime highs. Lifetime highs up there at 565 for the SPY. Very close. Very, very close. I don't know. Am I a bull or bear today? I really have no idea. Part of me wants to be bullish because the SPY is really close to lifetime highs, and I think that's good for the market. I think it needs it. I think Nvidia is close to 120s, which is closer to a full-on rebound when a lot of people said it would fail or whatever short term. And so I want to be bullish, right? The confirmation bias part of me says bull, but I also think we're up a lot yesterday. I think just in turn, it's a Friday, so sometimes we get choppy action. So I'm kind of neutral today. I think it's possible we're up so much that we start to pull back a little bit today. It's also possible we chop. But if we get some steam, we could also break lifetime highs in the SPY. So because of that, I'm flat. I'm neutral. I don't really know what we're going to do. We do have import-export prices at 8:30 today. So we do have import-export price data at 8:30. I don't know. It's really not going to move anything, I don't think. We'll cover it, but again, I just really don't think it's going to move anything. Ooh. Oh my gosh. Man, social media. Oh man, social media shows me some crazy stuff, dude. Honestly, I don't even want to talk about what I just saw on social media. Yeah, there's a post that says people will do anything to avoid admitting they're wrong. 100%. I see it the most on YouTube, right? Like, the amount of people who argue with me over dumb stuff. Adobe earnings were bad. Bad guidance for the fourth quarter, Cal, is what happened. Bad guidance for Adobe. Yeah, we got Michigan consumer sentiment at 10. We got import-export prices at 8:30. Sweden right now, 2.2 interest on my mortgage, 2.87 with no discount, but 1.181 with my misses discount. They're dropping them quick here. Yeah, well, they're gonna start to drop them as rate cuts become more and more probable. You know, and even as early rate cuts happen, they're gonna start dropping it for everybody. So. You know. Yeah, so I saw, yeah, if inflation starts rebounding, I can see the market freaking out. Yeah, I'm looking at the poll that we have going on here. 62% think rate cuts are a good idea. I disagree. You know. I guess it depends on what markets you're involved with. If you're involved with like real estate, of course you're gonna want rate cuts because you want interest rates to go down so you can do more business, right? But outside of those industries, it's gonna negatively impact everybody else for sure, right? Like those are the only people it's gonna really benefit is, you know, car dealers, like, you know what I mean? Like if you sell cars, sure. If you sell real estate or mortgages or lending or banking in one way or another, sure, right? But what do you think is going to happen to everybody else outside of like first-time home buyers? Yeah, it's just not time. But I get it if we do. Like it's gonna, like I'm always saying negative things about rate cuts, but I also have to call a spade in some ways, and I think rate cuts can be good if they start to correct the, like right now the problem. It's really expensive to buy a house. The interest rates you're paying are obscenely high relative to the rent you're paying in most places. So, right, usually the conventional appeal of real estate is that you can buy a house or mortgage a home and you're going to pay less than you would in rent. You know, now the cost of that is a big down payment. So it's not like you're just going to, you know, they like to advertise it as, hey, pay less in mortgage than you would in rent. And that's true, but you're putting down at least, you know, 10, 20, 30 grand to do so. So it's not like it's just a net nothing. So interest rate cuts don't affect. I have a plumbing HVAC business and it's not good for my business right now. What is it? Rate cuts or the economy? The what? Well, some people are going to say if rate cuts happen, the market's going to drop. I think if we do 50 basis points, the market's going to drop faster. But I might be wrong, and it's all speculatable, you know. All right. Inflation's definitely still a problem, but not in the same way. Like inflation growth is not a problem. The lingering effects of the inflation that we've seen over the last 4 or 5 years is still a problem that a lot of people are unhappy with. And so the only way to combat that is to slow it, down as much as possible so that it doesn't go up more. Well, they were thinking of an emergency cut because of the yen carry trade drama where the yen got pumped up. The interest wasn't as favorable for people buying U.S. assets with, and so in turn, the whole market panicked and sold the U.S. assets that they bought with the yen leverage, and it caused like a little mini flash crash in the market, and then it basically rebounded all the way back. We're basically all the way back from that. And so, that's why they were thinking about doing the emergency cut after the yen carry disaster. Hey guys. Yeah, man. Okay. All right, we're back. Yeah, definitely top 3 most wrong person ever in the world right now. But what do you think I'm wrong about? People always say, hey, I'm wrong, or hey, John, wake up. But again, a lot of them don't like to elaborate because usually, like, there's a lot of political bias, 100%. Like, people that don't like the current administration, right? And I'm not agreeing or disagreeing with you guys, but there's a lot of bias in that way, right? From people saying it's the worst it could ever be, and I'm here to tell you it's not. It's nowhere close to the worst it could ever be. The truth is somewhere in the middle, right? And I think people have to do a better job of like separating themselves from all the nonsense that you get from election years. I'm not saying things are perfect, right? But objectively looking at everything, and when I say this, I say, oh, well, the numbers are wrong. It's like, okay, even still, I think we have to look at the numbers, right? Even if they end up correcting them later, we have to look at the numbers. And again, I'm not against you. I'm really not. And maybe I'm wrong. I certainly could be. I just think that we're not in some end of the world scenario yet. Unemployment's not nearly high enough to be that one bad payroll report doesn't signal that. And interest rates aren't even objectively super high relative to averages, right? Like it's not like we're at the top 90%. Or it's not like we're at the top 10% of where interest rates have been in the last 40 years. It's nowhere near that. Like if you look at the federal funds rate, and so people acting like it's just some horrible situation. Like, look, here's the federal funds rate, right? We are here, right? Look at this. We are way down here. Even at the peak that we've been, we're way down here. And so, I don't know. I think one thing that the market likes to do is sensationalize things, and they like to make you think it's the worst it could ever be, or it's the greatest it could ever be. They do it on the other side too, for sure. But I don't know. I think, yeah. I'm not saying I like or dislike anybody regarding politics. Again, I'm neutral. What I'm saying is that regardless of anything that has to do with any of that stuff, we're not in like some end of the world doom and gloom economic situation right now. We're just not, and I think honestly, if we do go into recession, I'm not going to say it's good, but that's not the end of the world either, because to be honest, we need to correct. Real estate could use a correction, to be honest. Cars can use a correction, and they have been. Like the automobile industry can use a correction, and they have been, and that's good. Honestly, it's not failing. It's good. It's necessary. Again, we showed you guys they're up too much to begin with right now. And so, I don't know. I think a lot of people, I think the news on every side does a really good job of getting people upset and making people freak out, because the more fear, the more people tune in, right? They want to watch a fire burn. You know, and a lot of YouTubers do the same thing. Oh, the world's going to end. The market's going to crash. It's the end of the world. This is going to happen next week. Every single FOMC meeting, the market's apparently going to crash. Every single CPI report, apparently the market's going to crash. And again, from somebody that covers all of them, I cover all the FOMC meetings, all the CPI reports. The market doesn't usually crash for many of them. It's not a really high probability thing. And so, I don't know. And again, maybe I'm wrong. Maybe the economy's super weak and we desperately need rate cuts to save us from the super weak economy. I just don't see it. You know, I just don't see it. And maybe I'm missing it. That's true. That's possible for sure. Philip said, listening from Sydney, from down here. You should have said from down under, Philip, but it's okay. I'll let you slide with that one. Listening from Cindy John from down here, I can assure you you're one of the more balanced YouTubers. You're sensible and understand what's true and what's mostly BS. All good to you, friend. Hey, thank you so much, man. I appreciate it. I try to be balanced. I really do, you know. But again, most people are not. Like, again, I've said it before. I'll say it again. If I told people, like, both political sides would hate me if I told people, like, and that's, I guess that's where I'd rather have it. Yeah, housing and rent's definitely still a problem. Mahogany John, you're not wrong. Hey, top 3 least wrong traders in the world right now. Hey, can you check the definition of obscene? I mean, listen. You are using the standard conventional definition, okay? If I say I'm fixing to go to the store, okay? If I say I'm fixing to go to the store, does that mean I'm creating a store, you know? No, of course not. It's slang. Me saying, hey, that's obscene, can be, I can say obscene in both good or bad. I can say, hey, look at how much money I make. It's obscene, right? In a positive context. I could say, oh, did you see that car wreck on the interstate? That was obscene. You know, and that would probably be more true to the actual definition, right? But you're taking something I'm saying out of context that was mostly like slang, and trying to criticize me for it, which is fine, I guess. But like, find something else to do, brother. It doesn't matter. None of that matters. 50 basis points. No, so what the reason we got to start talking about rates and decisions is because if you look at the likelihood, we're almost 50-50 here for rates. We're at 57% to 43%, you know. So we're close to 50-50 here. We're much closer, much closer than we were yesterday, even. Yesterday, I think we were at 75-25. So, yeah, I have a friend of mine. Yeah, but again, Gregory, it's slang, man. You're critiquing my slang, and that's okay. But again, it might be better to find something else to do. I'm going to use a lot of slang here. I'm from South Louisiana, bro. So I'm going to use a lot of slang. I have a friend at jiu-jitsu. His name's JB. He's from South Korea. Great guy. Really nice guy. Super friendly. He's a black belt in judo. Him and I are friends. We train together. Great guy, right? And so I was kind of teaching him about slang and about how common slang is used in English. He's learning English right now. He doesn't speak great English, but he speaks it. He can get by in conversation. And I was kind of teaching him that like slang is super heavy used here. We're going to say a lot of stuff here that people might not understand, but it's just super slang heavy. And so, yeah. Wait, the Dolphins played yesterday. Robert and Tua got hurt. Did he really? Oh man, I didn't see it. Honestly, I didn't see it. So that's unfortunate. Yeah, I mean, Gregory, again, I'm gonna say it again. Find something else to do. You know, I get it. You might disagree with me about something else, and so, you know, desperately finding something to criticize me about. But my context of the context that I use the word obscene in is insignificant. Who cares? You know, you critiquing me for that is obscene, Gregory. Okay, I'm gonna use it more now, I think. Yeah. I was up a grade on my paper IRA, but dang, gave half of it back. Blessed to be above the stock. Hey, keep trying, Tiny. You'll do great. You know. Hammer time is slang for see you next week. Yeah. Good day to you, sir. I didn't see the Tua thing, unfortunately. But yeah, people get weird on YouTube. You know how you ever heard me talk about the people who get so like insecure about what I'm saying? Like, listen, guys, the nature of the market is we're gonna disagree about a lot of stuff. That's normal. You know, I might say I like chocolate cake. You might say I hate chocolate cake, right? Is either one of us right or wrong? No, it's subjective. It's opinionated. I'm going to be opinionated here. I'm going to have my own opinions about what's good about the economy, markets, through my own life experiences. That's normal. And you guys might disagree with me, and it's all love. It's okay, right? You don't need to sit around and critique random, random words that I'm using. To be honest, I think he probably just hasn't been around that many people from different places, regardless of where he's from. The context that I'm using the word obscene with is not really uncommon. So, I'm not sure if he's, or what it is, but, good day to you, sir. So we got import-export prices coming out in 2.5 minutes. So import-export prices, again, I don't think this is going to move the markets, but as we always do, we're going to cover it regardless. Import-export prices are expected today at minus 0.2% for import-export prices. Minus 0.2%. And again, we'll see what we get. I'm ready for them. They drop in about 1.5 minutes, really? A little bit less than that. Maybe a little bit more than that, I mean. We also have Michigan consumer sentiment data today. Oh man, I'm sorry to hear that, Sam. That's terrible. Yeah. No core consumer price target. Consumer what? I'm assuming you mean Michigan consumer sentiment data. I don't know if we need a timer for that. None of these reports are the big, like, huge monstrous reports or anything. Like, none of these are crazy big. What's your opinion on social media traders? Are they legit? I mean, I don't think we can paint them with a broad brush. I think some of them are probably good. Some of them are, not good, Coming from one of the top 3 worst traders of all time ever in the world. I don't think we can just label all of them good or bad, as in most things. It depends. Yeah, this is obscene that we're getting in this big argument over the definition of obscene. All right, guys, here we go. We got 45 seconds left. Consumer sentiment has huge reactions sometimes. Yeah, sometimes it does. Can you explain 2008 cuts versus now? Here, hold on. I'm going to cover the import-export prices in about 10 seconds first. So import-export prices dropping right now. Again, minus 0.2% is what's expected for import prices. So there we go. Minus 0.3% is what we showed up as. Minus 0.3% for import price indexes versus minus 0.2% expected. Export prices showed up at minus 0.7%, much less exports than imports. Probably going to see it as a negative, I would guess. But again, the market hasn't really moved much to this. As I said, this is not like a huge release. It's just not. Also, I'm going to put it in sub-only mode. Definitely top 3-ish obscene slang users in the world right now. Yeah, the word obscene is on par with the F word in terms of versatility. 100%, Like I say 100%, and 100% doesn't mean literally 100% truth. It's just like a filler word. I say, like, I'm from Louisiana, so I say a lot. If you ever hear me talk, right, I'll say as a filler word really, really heavily. Top 3, sayers in the world. Boeing, again, down big after strikes looming. Boeing has kind of rebounded all the way back up, though. Look at Boeing back up. Adobe had earnings. Bad Q4 guidance caused it to dump. Here's Boeing starting to bounce back again. There was strike news from Boeing. There's a contract rejection. Yeah, I'm sorry to hear that, Sam. That's terrible, man. Sorry to hear that, brother. So what's with the crazy rally? You could say the obscene rally. Great White, correction. No, have we rallied that much this month? Let me see. Here's a 20-day chart. September started right here. So honestly, we're actually still down in September. So September started right here. And the SPY has decreased and then rebounded back up. But we're still technically red. We're right here. So we're still under where we started the month at. So we're not necessarily like super red in September. Not in the SPY. I can look at the Q with the same lens here, but yeah, so we started the month of, so even tech. Now, what has rebounded, though, is NVIDIA has rebounded a lot. NVIDIA is actually green so far in September, which is good. NVIDIA, it's mostly flat, but it's slightly green. So, again, like people always say the September slump or, that we're going to pull back in September, and that's fine. But it's not 100%. It's not definitive. It's not absolutely going to happen. You never really know, and it's a case-by-case thing. Some Septembers are bullish. Some Septembers are really bearish. Some Septembers are neutral. And so it's not a definitive thing. Yeah, gold's been breaking lifetime highs. So gold broke lifetime highs this morning. Broke $2,600. Got up to 2601. It's now almost at 26 right now. So it's close to there. Yeah, but I'm not on that list, Sam. It hurts, dude. It's a dagger to my heart, sir. I better be careful with slang right now. People are going to get upset. I don't mean literally, guys. But isn't it more likely? Isn't it more likely than less likely to be bearish in September? 100%. It's definitely more probable to be bearish in September versus other months. September is historically the worst month in markets. It's the worst month. September has an average loss of minus 1.5%, I think, for the S&P 500 in September. So September's not necessarily a good month. What I'm saying is that it's not definitive. So what I mean by saying, hey, it's not definitive, it's not definite, it's not 100% going to be red always. Now, a lot of the time it's red. It's more probable to be red in September. But we can also have green months of September. It's not, that's not necessarily uncommon. Or I guess it's uncommon, but it's not necessarily always red in September is the point. Yeah, it's all right. Matthew says the 2 big green days in a row that we just had are super rare. Really, go look at last September. I mean, even if last September was red, it still doesn't mean that every September we're going to have red months. That's only one other sample size, And so that's my point, is that, sure, it's more probable to be red in September, of course. What I mean by definitive is that it's not definite. If it was definite, everybody would just start shorting and nobody would do anything else in September. Nothing's definite in markets. This month was obscene. Cuts 2008 versus now, please. Why 2008 was bad and why people are bullish now. Number one, I wouldn't even say people are bullish, bot, gamer guy. What I'll say is 2008, we got rate cuts. Let me see when we started cutting rates. I'm going to look at the Fed's fund graph again regarding 2008. So 2008 was here. So yeah, we started cutting rates. You can see the federal funds rate was right about where we were now. We started cutting the federal funds rate in late October. In late July. We cut rates all the way back down to almost zero. But again, this was because the mortgage market was failing. Right? So what happened is like 2008. If you've ever seen the movie The Big Short or maybe you experienced it yourself. This was almost 20 years ago. But if you've ever seen that, what happened in 2008 was that the lending industry overall got really, really greedy. They gave way too many people mortgages that couldn't afford them. They were so competitive with mortgages that competition and that competitiveness drove them to be way too loose with mortgages, right? And they did this because Big Brother, Fannie Mac, or whatever I might have gotten that wrong, would come in and buy the mortgages from the small regional banks to begin with, right? And so they didn't really have to sit on that risk. The government did. And so they would be super loose with mortgages. And they'd give out all these mortgages to anybody. Sometimes they did no income, no job. Like they called them ninja loans, no income, no job. Again, this created a bubble in mortgages, right? And it wouldn't have been the end of the world scenario if the rating agencies were honest about what was in some of these bundles of mortgages that they were selling to investors, right? So they started selling these mortgages in bundles. They could call them collateralized debt obligations. There's a lot of different bundle types in these industries, or at the time in these industries, there's a lot of different bundle types. And so they started selling them to speculative investors, and investors would hold on to them. And the overwhelming consensus was that it was pretty safe because it was mortgages and people would always pay their mortgage. But the rating agencies had a conflict of interest. And so they would just automatically label these mortgages that had more and more people defaulting and failing. They would just rate them AAA. So they would basically, the rating agencies wouldn't rate them accurately. And so investors would buy these up, and they thought they were good investments because the rating agencies had them labeled as AAA investments. But they weren't, right? And this is what Michael Burry originally spotted, is that Michael Burry spotted that these were not truly AAA investments, that they were weak, and that when some of them started to fail, the loss of confidence in the rest would increase, and it would have this trickle effect that would crash the mortgage market, right? And it was caused by a lot of different things, but that was it in a nutshell. And so Michael Burry started shorting aggressively mortgages when nobody else did. The Federal Reserve started to get nervous as the mortgage industry started to struggle, and so they dropped the federal funds rate to almost zero. Very similar to what they did in 2020. Here's 2020, but they dropped interest rates to try to stimulate the economy. But it was kind of too late, and ultimately we had this big downturn Now, right now is different. So like somebody saying, hey, what's the difference between 2008 and right now? A more mirroring view of 2008 would be 2020, right? 2020, we had it here. We brought interest rates down to almost zero to try to save us. Right now, in 2020 we had the pandemic, so everybody was panicking. It was more closely mirroring 2008, in that the Federal Reserve needed to bring interest rates down fast, right? And so that's what they did. They brought them down quickly in 2020. They also did QE in 2020. I don't think they did QE. Let me see. I'll have to look this up. Where's my trusty chat GPT? I don't think they did QE in 2008, from my understanding. They might have done it a little bit earlier than that. Okay, so yeah, they did do QE. They did the first round November 2008. So they did do QE. So again, the difference between now is this. Okay, 2008, mortgage market crashed. They were so desperate to stimulate the economy because the whole mortgage market crashed, and eventually they corrected it and they started getting much more strict in regards to mortgages. But in 2008, the mortgage market crashed. The Fed needed to step in and save the economy, so they did QE, meaning they printed money through creating bank reserves and then using those to buy financial assets and then injecting liquidity into those markets, ultimately allowing banks to lower interest rates and trying to prop up the economy through that. And they also cut the federal funds rate down to almost zero, and you can kind of see that here, right? Same thing they did in 2020 or 2020, right? In 2020, right here, they did the exact same thing. They brought interest rates down to almost zero. They did quantitative easing to try to inject liquidity into those markets and prop up the economy, and that's what they did, and you can kind of see that reflected. And here, the consequences of both of those markets were inflation spikes. The difference now, if we look at CPI inflation here over this period of time. So if you look at, here's 2008 right here. So again, you can kind of see CPI inflation spiked up in 2008. But the difference here is that they sent out stimulus checks. So the stimulus check effect of this caused inflation to spike massively. The difference between, somebody asked me, I guess the point of this is, what's the difference now versus back then? The difference now is that we're not doing QE. At least I hope we don't do QE, which would make inflation worse. We're also not doing stimulus checks like we did in 2020. Right now we're talking about the opposite. So essentially what happened is, like, if you look at the federal funds rate, we've raised rates really aggressively over the past year, and we've maintained those high rates. We've been pausing interest rates, but it's not the same situation. The point is, we don't have as much economic weakness now that we did in 2008. It's just not the same thing. It's a different scenario. It's a different nuance of today versus 12 years ago, 13 years ago. Anyways, the Q is now pulling back. The Q is technically red on the day now. Gold's pushing up. Nvidia's still slightly green. Yeah, there's a lot of stuff. That would be obscene, foo. I know, that's my point. Is like, people use obscene in a, like, obscene. The technical definition is like shockingly gross, or horrible, right? Let me look at the actual. I don't even. It's something. It's something like that. I don't know what they've just like. The portrayal or depiction, offensive or disgusting, right? So like horrible, shocking, gross, right? That's the technical definition of obscene. But people use obscene to say good or bad things. Like, hey, I had the most amazing investment. It went up so fast it was obscene, right? Like, people use it in positive and negative ways. So, top 3 obscene traders in the world right now. When the market goes down, is it time to go bargain hunting? Generally, yes, but you don't know how long. You don't know how long. You don't know. It's all relative. Like, just because we're dropping does not mean it's time to buy. It depends on where the stock is. Colloquial slang in Texas is extensive, but geographically everywhere, for sure. I'm from Louisiana too, but it's, you know. People say the Qs and SPYs are dumping, but look at the 30-minute chart. And, yeah. But that's kind of like me saying something's ripping up. Like, I don't know how many times I'm looking at something short-term. So, like, an example is the Q. I zoom in on the Q here, and I'm looking at very short-term price action. And I say, oh, look at the Q rip up to the previous closing price. And then somebody puts a 4-hour chart up here, a 20-day chart, and they say, we're ripping up. We're down since July, you know. And it's like, well, sure, I could always isolate a specific time frame and use that to disagree with whatever direction short-term traders are talking about. But is that truly accurate? I guess is the point. No, it depends on the time frame we're looking at, you know. Like, basically, we could be bullish. We could be bearish very short term and down over the last 30 minutes. We could zoom out a little bit more and say, hey, we're technically green on the day. We could zoom out some more and say, hey, we're technically down since August 22nd. We could zoom out more and say, hey, we're technically green on the year. We could zoom out more and say, hey, you know, like, you could always isolate a time frame. I just paid $80,000 for a Tahoe? Man. A Tahoe, dude. Do they even make Tahoes anymore? I guess they do. $80K for a Tahoe, brother. Wow, why? Looks like they're 50 to 70K. Well, I pay 80. I guess 80 after tax, maybe. What I'm showing is 2024 Tahoes cost about... Okay, so it says the Tahoe starts at just over 50K. It can easily exceed 80K if you like your options, according to Edmunds. So I guess you're right. I'm wrong. You're smart. I'm dumb. You're very good looking, and I'm not attractive, guys. All right, I'm sorry. Yeah. Point is, there's a bubble in automotives. Yeah. All right, guys. All right. Let's do this. Also, if you haven't already, check out Top Step. Honestly, we're up hundreds of dollars already in our funded account. I'm slowly growing this account. And honestly, it really is the best edge in trading, in my opinion. This is the single best edge you could find in trading. All right, why is it the best edge? Because if you look at my trades, and I zoom in here, right? Like, look at my trades. Like, I had a really nice day. We had made over $100. These are all my trades from yesterday, right? And, like, look at these. So we ran about, what, 70% accuracy yesterday. The beautiful part about this is that I can trade small, and on Top Step X, there's no commissions. And so Top Step funded account program, they give you a demo, test your skill with it. The base one's 50K. You get a 50K demo. If you can make 3K on that 50K demo in futures without losing 2K first and following their rules, they fund you 50K with a 90% split. The cost of that is only $49 and a monthly subscription. And so your risk is $49 a month. Very, very cheap. Limits your risk when you're learning how to day trade. And if you're good enough at day trading, you can pass it. You got a 90% split once you're funded and pass it. And so you can build up more profit, withdraw it, and fund your own account if you want. And if you lose, your risk is much less than you would putting up thousands of dollars and losing that yourself, which is what happens to most day traders. You can also day trade, and there's no PDT rule. The S&P 500 and the NASDAQ are tradable on there, so you can basically trade the SPY and Q price action. Patterns are very similar to blue chip stocks, and your risk is very, very small. The other huge edge is that there's no commissions. So there's no commissions. There's only a small amount of fees. I can trade micro contracts and futures. And again, in my opinion, this is the best edge in funding right now. I can trade micro contracts and futures, $14, $6, $10, $12, $21, $5, and still profit a majority of this. You know, it's 74 cents a trade in fees, tiny amount of fees. That is, again, legit one of the biggest edges in trading. And they pay out tens of millions of dollars. They've been around for over a decade. They're a sponsor of mine. They pay me money. I'm biased for sure from it. Understand CFTC 4.41 hypothetical or simulated performance have limitations. I do trade off stream. I'm not even claiming to be a good trader. But check them out right here. And we're going to day trade on them today, guys. So stick around. We are going to be day trading on them today. Gold just broke lifetime highs again. Gold got up to 1601 just now, I think, guys. Let me see. Yeah, it's a 1 minute chart. 1601 for gold. Gold just got up to over lifetime highs again. 1601.30 is now the new lifetime high for gold. John is Satoshi. Think about it. Multiple income sources. He's a programmer. It's confirmed. Hello, world. I'm not Satoshi. How has AI affected trading? Well, AI affects trading in a lot of ways. Can you explain day trading power, please? You're gonna have to be a little bit more specific, brother. Day trading power? Is this like a Power Rangers-esque thing? Or am I missing something? You gotta elaborate, bro. Yeah, definitely top 5-ish non-Satoshi traders in the world right now. I'm looking at gold futures, Justin, so /GC. Yeah, I personally think the real Satoshi passed away already. Oh, you mean buying power, right? So buying power if you're day trading. If you're day trading stocks, it depends on what you're day trading. Futures, you can use a margin account, get instant settlement, no PDT rule, right? But if you want to day trade like stocks, as an example, you're going to need it. There's a lot of ways you could do it, but if you want to day trade stocks, you're going to need some money, right? The reason you need money in stocks is because the PDT rule means that you can only day trade 3 times a week per rolling 5-day period if you have less than 25 grand in a margin account. You can only day trade 3 times a week. You could always use a cash account, but with a cash account, you're going to have to wait at least a day for your funds to settle. Meaning, if you got a $10,000 account, you got to wait a day to get your money settled. So if I buy 1,000 shares of a $5 stock and spend $5K and my account's $5K, that means that I got to wait at least a day to get that funds put back into my account. So I can only trade like once a day maybe, and I can only go long in a cash account. A margin account means you can go long and short. But again, the futures market is probably where most day traders want to day trade. There's no PDT rule in futures. You can day trade the S&P, the NASDAQ, gold, some currencies on Top Step. There's no PDT rule. You can use a margin account, get instant settlement. Most pro day traders trade futures. And the patterns are very similar. Like if you look at NVIDIA and you look at the Q, here's the futures contract of the NASDAQ, which is what you see me trading most of the time, is MNQ is what I trade most of the time. You'll notice, like if I zoom in here, it's pretty freaking similar to the NVIDIA chart. We gotta zoom in or zoom out or whatever. It's pretty freaking similar. It's not 100% accurate though. But a lot of the time, especially in moments of big volatility, NVIDIA and the NASDAQ are gonna move similarly to each other. So like really choppy action in the NASDAQ, really choppy action in NVIDIA, You can buy puts with a cash account. Well, yeah, you can buy options. You're still gonna have to wait for those funds to settle, right? Either way, options can be more or less risky. I love John's answers. I'm kind of a troll in some ways. I try not to be, but I'm very sarcastic. Cheers to you guys. I wasn't here for the Nvidia talk. Can we expect another Nvidia dip in the long term? Well, define long term, Maria. Does consumer sentiment bring the market back? I don't know. What I'm watching today at the open, guys, is the SPY. You know, the SPY is close to lifetime highs. And so if the SPY gets close to lifetime highs, it can, sometimes those high levels can act like a magnet, meaning if the SPY gets up to like 563s, 564s, a lot of the time it's going to have some push to get up and at least tap that lifetime high. Not always. Nothing's definitive, as I always say, but there's a chance, at least, in that way. Never heard of it. And again, right now I've been using Top Step. Bro, young people nowadays literally dress like they're in the 90s. They've carbon copied the entire 90s, guys. Like the whole 90s outfit style. I grew up in the 90s. All right, the gold just broke lifetime highs again. Got up to 2601.90. About to hit 2602 here for lifetime highs on gold. I've got a 15-year-old daughter. They literally dress exactly like we did in the 90s. And my problem with it is they act like it's unique to them, and it's not. You know. I'm seeing these young people, bro. They look like they're in the 90s. They've got literally bleach blonde hair, shell necklaces. Okay. This is like really, it's like 2001 style is really what it is. Like 01, 02. They've got baggy Jinko-like pants. You know, cargo pants are coming back. You know. Yeah. Get off my lawn, guys. No, I'm seeing a dude that looks like look, here's a guy. Look at this kid. This kid looks like he's pulled straight off of freaking. This kid looks like I did in like. This kid looks like I did in like 7th grade, 8th grade. He's got a shell necklace and everything. This kid looks like I did in like 8th grade, you know. My daughter tells me about it. She tells me that like every kid wants fake curly hair. So like the cool thing now is like curly hair, and every kid wants it, you know. So they end up like doing their hair. I think big hair like the 80s is coming back. You say the same thing about past generations. No one is going back to bell bottoms of the 70s. Yeah. But yeah, styles are cyclical for sure. But yeah, they have definitely stolen certain things about the 70s style for sure. Are you ready for rate cuts? I mean, I'm ready. It doesn't matter to me either way. I wasn't super young when I had kids. I was in my 20s. I don't really have a prediction in the S&P 500. I don't know. It's Friday. A lot of the time we get choppiness on Fridays, guys. So I really don't know what we're going to get. I really don't. People always ask me what's going to happen. I really don't know. You know, I'm asking people, do you think rate cuts are a good idea? 67% say yes. 33% say no. Do you think rate cuts will affect mortgage rates that much? I think there's generally a lag. So we could cut rates. It's going to take a year plus to really have any influence. Or not necessarily. So I think yes and no. I think generally there's a lag. It takes at least a year plus to hit stuff. But I think just the act of them cutting rates is going to make mortgage rates go down quickly, just in preparation for the rate cuts to have an effect, if that makes sense, right? So there's sympathy. I guess mortgage rates might go down with rate cuts in sympathy of the federal funds rate getting cut, you know. And they're already starting to go down in preparation for it. Do you guys use Lolo in US slang? Hitting the corners in those low lows, girl. You know, that's the only one that I can think of personally. I don't know. Lowrider is sometimes abbreviated to Lolo, but you know, shout out Dr. Dre, the Chronic. But no, that's the only one I can think of. Apple looking nice for a swing trade. Yeah, gold's been breaking lifetime highs again. It got up to 2604s. Again, SPY technically green. Nvidia just went red on the day, so it's still down a little bit. I'm not sure if it's going to continue. Yeah, and the only, again, the slang I'm using is Dr. Dre, still DRE. You know, the chorus goes, hitting the corners and the low, low something. I can't remember exactly what it is, but it's something like that. I agree, hoping it doesn't make its turn into house buying frenzy. Right, and that's what I'm saying. Like, I think we're going to start cutting rates. The Fed has said that they're going to cut rates about 4 times this year. If we could assume they're 25 basis points, that means a full percentage point down in the federal funds rate, right? If it's more than 25 basis points, that means it's over a full percentage point down in the federal funds rate. And again, that will drop interest rates to consumers eventually, and that could cause house prices, automobile prices to spike again, which is a problem. You know, it's a problem. You know, and of course, people want their prices to go up, but it's human nature to want your investments to appreciate. But too much too quickly is not a good thing for anybody. No, not anybody's too broad. It's not a good thing for everyday people, I should say. And so again, that's one of the reasons I think we should really slow. I hope it's only 25 basis points next Wednesday. I genuinely hope it's only 25, because if it's more than 25, that's a problem. That's bad. Yeah, I mean, yes, you know, I'll let you plug them a couple times, but you keep plugging them and plugging them. So no offense, just I don't know who that is. I can't really back check them. So sorry, bro. Meta, where's Meta at? Meta's down to 519s. Meta's had a great year. AI has helped a lot of tech. So if you look at Meta on the year, and again, I gotta say, you know, I used to dislike Mark Zuckerberg. The last year and a half, I can respect him turning Meta around, and he trades. And so, you know, I've seen videos of him. He looks legit in jiu-jitsu. And so I gotta respect him a little bit more now because of that. Again, there was a time where I thought Meta was going to fail. You know, Meta, while it owns Instagram and WhatsApp, it was at $88 a share. It dropped like this because they lost $10 billion in the metaverse. They put a lot of money into the metaverse, and they lost billions and billions of dollars from it. People were very scared. The whole thing happened as the crypto market corrected as well. So within a very short period of time, you had NFTs failing, which definitely negatively affected everything in the metaverse. People lost trust in it. They stopped pushing it. They stopped being interested in it. And they ended up just losing big money. And Meta as a whole ended up dropping under $100 a share. Facebook was losing steam. I was just really sketched out about investing in Meta, and I was wrong. I was definitely wrong. Meta had this crazy big rebound. It's gone from $88 a share all the way to $550 basically. Crazy returns for Meta. And again, this is part of the whole AI boom. You know, Meta has their Llama AI systems, and it's pretty good. Like, their AI is pretty solid. With that said, though, speaking of AI, look at NVIDIA dump here. So NVIDIA's falling all the way down. to 118.70s now. Yeah, Michigan consumer sentiment data drops. Yeah, I hope it's not 50. That would be a terrible thing. No, the Quest 3 is really good. And again, my son for a long time didn't. I bought both my son and my daughter the Oculus Quest 2s, and they sat in my second floor living room for a year straight. My kids never touched them. They never used them. I couldn't use them because I get motion sickness. And so I throw one of those things on. It just doesn't work for me. I just can't do it. I get motion sickness. And so I was kind of skeptical of that. But again, VR's taken off. My son loves... I bought him... A couple months ago, I bought him the Quest 3. And I bought him the Quest 3 because him and his friends started to play the Quest 2. And so they started using that thing a lot. And now he's got the Quest 3 and he loves it. I've talked to some people about the Quest 3. And they said it's really solid. So yeah, and I think that's obviously helping Meta as a company overall. So yeah, Tesla fell down this morning, but Tesla's up a lot already though. So Tesla's down to 228s, but Tesla has rebounded. It was down at 215s. 4 or 5 days ago, and Monday it was down at 215s. So it's basically rebounded $15 a share in the last 3 or 4 days. Although last Thursday and Friday, it did drop pretty big at 235s. So it's been slowly climbing up. Yeah, you'd be surprised at how many scam emails I get trying to fish Blaze. Like, they send me the dumbest stuff, dude. They send me stuff like freaking, like listen to some of these ridiculous claims, right? And I know they're fake. But this is how they catch people. They get people that are so desperate for sponsorships. Luckily, I get a bunch of sponsorship emails every single week. I get multiple people wanting, like, I'm not acting like I'm the top 3 most famous person ever. I'm definitely top 2.5. But no, I get a lot of emails from brand partnerships and stuff, mostly from new companies that want to grow their trading software or whatever it is, right? But every now and then, I'll get the most ridiculous scamming emails, right? Like, here's an example of this. You ready for this one, guys? I'm gonna quote this to you, okay? We are honored to introduce San Pellegrino. San Pellegrino, if you don't know what that is, it's water. It's a carbonated water company. You know, it's a big brand, and which makes it absolutely ridiculous that they're trying to email me pretending to be San Pellegrino. Like, San Pellegrino's watching my company, like, you know what? Let's sponsor John Beginner Trading. You know, get out of here, dude. I've had a lot of crazy ones that are just nonsense. They're not real. What they do is, just to put this into perspective, I've had some real ones, like T3 contacting me. I've had some real ones, right? But what these scammers do is they email you and they act like they're some huge company, you know. But it's out of touch, because anybody with a brain is going to recognize that that's total nonsense, right? But they'll pretend like they're Coca-Cola, you know, or they're Levi jeans. You know, number one, companies like that generally are never going to sponsor YouTubers to begin with, right? Like, Levi jeans is not about to sponsor me. You know, San Pellegrino is not about to sponsor me. That's the dumbest thing ever. But they find people that are so desperate to believe it's true. Confirmation bias, a powerful thing. You know, so these guys are so desperate to believe it's real that they're super interested. Oh, San Pellegrino, they're trying to contact me. You know, I'm gonna start drinking that on stream, or whatever. And then they say, hey, join this Telegram, you know, or whatever it is, right? And then they demand access. They find somebody that's really desperate for it, and then they demand access. They say, oh, give me your this and this. And they find some way to infiltrate their, like, fish for their email, their passwords, whatever it is, and then they catch them. That's how they do it, right? A lot of the time it's on Telegram and stuff like that. A lot of scammers. Luckily, I'm pretty resilient to it, but yeah. Oh, yeah, definitely solo, 100%. Imagine if they did, though. Honestly, I would never accept it. It wouldn't be like, not unless they're cutting me a check, like a big check every month. But it wouldn't be profitable for them. I'd probably just tell them no if it was real, but of course it's not. But if it was, it'd be really hard for me to sell you guys carbonated water, you know. Just doesn't have anything to do with this. Nobody's going to buy carbonated water from John on YouTube, right? You're going to go to the grocery store and buy it. It's the dumbest. That's what I'm saying. Whoever's thinking of these things, it's super dumb. Super dumb. Hey, thanks, Lolo. Have a great day. Warren Buffett needs my stock advice. If he reached out to me, I would just assume he was senile, to be honest. No, I don't open him or anything. You think Uber News could help Tesla? I don't know. Yeah, sorry, JG. My son's just gonna keep the old one so that he has something in case the new one doesn't work. Alright, guys. Don't we have a good fight card this weekend? Oh, we got Marab versus O'Malley this weekend. I'm pretty excited about that. All right, guys, let's do this. We got 18 minutes. Yeah, we're almost here, guys. So all right. Whew. All right, guys. So again, we'll see if NVIDIA can run. Yeah, I want to see if the SPY will break highs today. Mahogany John, the GOAT. Do you still have your Squeeze app available for Android? No, man. So I programmed that app using React Native. But again, so whenever you use an API like that, in a smartphone application, it costs money, right? So that app just costed money, and you know, I just put my focus on other stuff. I still have the code for it that I built on React and stuff, but you know. Bets on O'Malley. I think Merab's going to beat O'Malley personally. I did buy a quieter keyboard this one. Or maybe I did. I don't know what happened to it. Hey, sorry to hear that, JG. That's terrible, brother. I'm sorry to hear that, dude. And again, I would give to people online. Like, my wife and I try to, like, put goodness out in the world. We really do. Like, my wife met this person whose teeth were just kind of, like, struggling. You know, like, her teeth were, she needed teeth pulled, right? And like, I just don't trust people, right? Like, I'm not one that easily trusts people. But I try to be good to people, you know. But like, ever since we met this girl, she was a cashier that at a place we went to regularly. I'm not going to be specific at all. But, you know, we talked to her, and like, I would just get the vibe that she was trying to tell us how bad her situation is. Maybe she thought we had money or whatever it was. And I could just tell she was just trying to like sob story us a little bit. Every time I'd see her, she'd kind of have, oh, I'm struggling so bad, you know, which usually means like she's trying to set us up for something. And so the last time my wife saw her teeth, her jaw was swollen. And maybe she was just venting. That's possible too. And again, we try to help people. She had like a bunch of kids, and she was just a cashier, and so she's struggling. And so my wife ended up telling her that we would pay for her teeth, you know, to get her teeth pulled. You know, so we tell her we'll pay for her to get the teeth pulled, and like, of course, the dentist is coming at us. Like, well, like, again, to get a tooth pulled is like $500, right? So if you got a couple teeth pulled, it might be like $1,000 or whatever. And it wasn't her, to be fair. It wasn't her, but like one of the dentist freaking calls us, and the dentist is like, oh yeah, you know, we could just pull the teeth, but you know, we could really get it done if you guys want to, and we could really get it done, and it would only be about $5,700. Or no, I think they actually said $7,400. But they were like, oh, but we'll do it for $5,700. We'll give you a discount. And so my wife and I are like, absolutely not. Look, like, we're being nice, but you know, we're not gonna get your whole, like, you know, that's just not something we're about to do. I'm sorry. Like, you want the teeth pulled, we'll get them pulled, but we're not about to. And again, the reason I don't trust people, and what I told my wife is like, look, you need to understand this when we're getting in this situation. I don't mind helping this person. You know, we can help this person. Number one, we can never tell this person where we live, right? Why can we never tell this person where we live? Because when she sees that we'll help her out in that way, if she's ever struggling and doesn't have any place to go, she's going to show up to our house, you know? That's number one. Number two, as I told her, you can never really be friends with this person either, right? Because if you're friends with them, that's starting a relationship off on a very transactional thing. But again, outside of that, I do want to help people, and I think it's important to help people. I truly believe you get what you put out there. If you're nice to people and you're good to people, you get good things back. But I think also sometimes when you help people, they want more and more and more, and a lot of the time they get mad at you. You know, like, if you can't help them as much as they want, like, they get mad at you for it. They start like getting upset. And so I don't know, at least that's what I've seen in the past. Freaking dentist is probably the one about it. The ones that's pushing it. Anyways, we got 10 minutes, guys. 10 minutes. Yeah, I don't know her situation. I don't think she has insurance. You know. All right, yeah, I'll check it out, Sam. The overarching point I'm trying to make is, like, I don't trust people. And again, I'm very hesitant. I don't mind helping somebody. But again, it's kind of the point. Like we said, we pull some teeth, and now the dentist is trying to get us to pay almost $8,000 for stuff. And of course, we're not going to do that. And again, like I said, we just can't tell the person where we live. You can't really be friends with them either, because then the relationship is started on like a transactional basis. So it's but again, I want to help, and I feel for, you know. For me though, I can kind of see the signs of like, I don't know. Like, I've tried helping people a lot with a lot of different stuff. Sometimes I'll let them on my stream, give them plugs, you know. And again, what happens is that if you stop letting them come on the stream, they get weird. I've had it before happen too. They just get weird. People get weird, you know. They start blaming you for everything that didn't go right in their life. They start getting upset with you like it's your fault. And people are just strange, man. Sometimes misery loves company. And so, you know. Yeah. Carol and I were watching the movie Passengers. And one of the quotes was, a person drowning might always try to grab somebody else and drag them down, you know. 50B, I just hope we don't cut 50. I don't think we need to. The big problem, I just hope we don't do QE. Even if we have bad economic reports and a bad economic situation, I hope we don't do QE. I don't think we need to do QE. It's going to make the situation worse. I don't know. I don't really know, Mike. I know, like, a lot of people, some people just have teeth problems, you know. But I also know, like, if a bunch of people's teeth are falling out by the time they're in their early 20s or mid 20s, usually it has something to do with substance abuse. Right. And so you can put a Band-Aid on that and fix it, but a lot of the time it's just going to go back to that eventually if they continue to use, right? And so yeah. It's also cosmetic related, and I don't know. Yeah, so QE is, I just hope we don't do QE. No, it wasn't 5K to just pull a teeth, right? Pulling the teeth would have been like $800 or $900, right? I got a tooth pulled, right? And to put this into perspective, to see how, like, my back molar right here is pulled. I still haven't gotten it replaced because I don't care and nobody can really see it. And so one of my back molars right here is gone, and never got it fixed, right? And I have the money to get it fixed, but I just don't, like, I don't care that much about missing a tooth in the very back of my mouth that nobody can ever see unless I open my mouth really wide. It just doesn't matter to me. And so I'm definitely not about to pay for somebody else to have their teeth fully fixed and implants and dentures and all that stuff. That's what it was. They were like, oh, well, look, guys, we could, you know, they're like, the dentist was like, hey, we could do all this stuff. We could we could do a tooth implant in and put a fake tooth in, and then, you know, do teeth whitening and then realign their teeth and have them straight. And it's like, look, we're not her parents, right? Like, we don't even know this person. And so we'll get the tooth pulled so that you don't have like a actual problem, but, you know, that's the extent we're taking it. Anyways, SPY at 560s. You got me ranting about teeth this morning. The most philanthropic thing I've ever heard someone do. I mean, I don't know. You know, I don't know. I'm more venting about it. I'm not trying to make myself look good, right? Like, if it was up to just me alone, I don't even know if I would have done it. My wife is the one that really pushed it, to be completely honest. I'm not trying to be self-righteous here. So. All right, guys, NVIDIA up to 119s. So, again, a lot of chop. We got 5 minutes until the market opens. We'll see what happens. Definitely top 3 most self-righteous people in the world right now. Yeah, I mean, Jay, I don't know. Again, I think sometimes I don't know. I think I've told the story about my wife's friend. My wife used to have this friend that she went to school with a long time ago. And so this friend moved out to Texas, right? And like, again, I'm telling stories because we're just freaking choppy right now. And so I'm telling stories. Stories are fun. Y'all, I've told some of these before. But anyways, this friend moves out here. And, you know, this was like a decade ago or more. So this friend moves out there, right? She has this baby, right? And she gets pregnant. And the guy that got her pregnant just kind of rolled out and left. And she never saw him again, you know? And so she starts dating this other guy, super nice guy, right? A little bit too nice of a guy, in my opinion, while she's like 6-7 months pregnant, which, again, I'm not here to judge, all right? So they're dating and everything's good and fine. And you know, we see some negative, like, characteristics about this person. Her decision making is not really that good. She almost seems a little bit predatory with people. Like, she found some other guy to, like, basically step in. And eventually one day, apparently, this dude ends up talking to his mom. And his mom told him what every mom should probably tell their son if your son meets a 6-month pregnant lady and she wants you to be the dad. The mom told the son what he needed to hear, which is, bro, get the heck out of there, you know? And so that kid, she had the baby, and I think the guy was there once he had the baby, and then the mom had the talk with him and was like, dude, get out of there. And so the dude just basically ghosted her, and she never saw the dude again. Well, and again, so then she starts getting really buddy-buddy with my wife, right? So she's trying to hang out all the time, And she ended up meeting some other guy that she had known for like a week and then moving in with him, you know? And, you know, she starts to ask my wife to go out to like the club with her and to like leave me at home with the kids, which again, Carol can do whatever she wants to do. But Carol didn't want to go to the club because Carol's married with 2 kids, you know? It's just not really something she wanted to do. And so she would tell her no, like, I don't want to go to the club. And so then the girl would start getting mad and start like bad mouthing me, you know? And eventually my wife had to be like, hey, like, I don't think this is our friendship ain't gonna work out here. Like, what we think was trying to go on is she was trying to get me out of there so that she could move in and basically be subsidized by us, you know, with me not even in the picture anymore. So you just got to be careful. You just got to be careful. There's some people that are just predatory, right? And again, that has caused like a lack of trust. You know, I think she ended up finding some other guy that took in her kids or whatever it is. It's just, you just gotta be careful, guys. All right, guys, 1 minute. But I guess my point is, like, you try to be nice to some people and they just kind of, people resent you when you really don't know it. People just can be resentful. Yeah, dogs are my sweet spot. We went to the pound. My mom adopted a cat. Not this past weekend, but the weekend before. Hard place. Hard to go see those animals, man, at the pound. Yeah, I'm not going to really talk about the election. All right, guys, we got 20 seconds. NVIDIA is basically completely flat. Look at the SPY fall here. SPY down to 559.70s. Uber autonomous ride hailing to Austin and Atlanta in early 2025. Vista Outdoors. So we got 4 seconds. Here's the opening bell. But look at the SPY fall. It's a big drop ahead of the opening bell, guys. We're going to start day trading here, too. On Top Step X. So, again, here's Top Step X. I'm going to let the opening bell play out a little bit first. Big rebound back up. All right, look at this big rebound at the opening bell. I'm looking at the SPY. Again, I want to see if the SPY is going to break lifetime highs. The SPY, though, is down, although the NASDAQ is up a little bit. NVIDIA hasn't really moved at all. It's right around the previous closing price. And now, remember, it's Friday today, guys. So today is Friday. We might get choppy neutral activity. Crazy story, John. Yeah, I mean, one of the rules that my wife and I always made here is that we could be good to people. Like, we could be nice to people, but we're never going to let somebody else move into our home, regardless of how much they're struggling, regardless of what's going on in their life. Not any of our friends, not any of our family, not anybody, because that's what destroys relationships. Like, the amount of stress that you get living with somebody, especially somebody that you don't know very well, is super unnecessary for a relationship. Now, if family might be different, it just depends. Like, parents are different. If my parents needed to move in or whatever, I'd let them. If Carol's parents needed to move in, we'd let them. But outside of that, nobody's coming. I've had friends that have said, hey, I'm struggling. I've reached out. Like, I have friends from Baton Rouge that, you know. But yeah, that's a rule that we have. SPY starting to move back up. NVIDIA's starting to bounce a little bit too. Let's see if it drags everything. Look at just really choppy action today, guys, at the opening bell. Look at the big up wicks and down wicks. And so just sideways action right now. Just be careful. Oh, it is Friday the 13th. I didn't even realize. Boeing CEO says the door's still open to contract negotiations. Russell's pushing up. Yeah, I mean, luckily all our parents are in pretty good spots to where they don't really need to, you know. What's the overall sentiment? Yeah, I went to the pound with my mom. It's so hard to walk through the dog section. Dogs just have like a sweet spot in my heart. Like, I can't, you know. It's so hard to walk through the dog section because some of the dogs are so sweet and like friendly and nice. And they've been there for a long time, you know. It's just hard to see. Boeing's basically filled the entire gap on the downside, though. So Boeing's all the way back up there already. So Boeing's up there. Part of me wants to short this right here, guys. So I'm going to short one contract here. We're going to start it off small. I think we might correct and come back down. Oh, dude, I just did it again. We lost a little bit. I wanted to add to it. I accidentally covered it. 2 contracts here. Alright, I got like somehow we got out profitable on that last little contract, but we're down a little bit so far this morning. I'm gonna get out there. So we ended up losing like $18 from this trade. First trade of the day. We're down 18 bucks. Pretty small. I might actually jump right back in here now that I look at this. NVIDIA looks like it's trying to come all the way back down. Oh my gosh, I did it again, dude. I'm trying to add to this position and I keep like messing up my entry here, which is all right, but oof. Big squeeze up. All right, so we got out again. We're probably down like 30 bucks. It's pretty small. The problem is the SPY's starting to rip up, but NVIDIA's coming back down. I'm probably over trading a little bit. I'm going to take my hands off for a little bit and let things settle down. We're only 6 minutes into the open. I think we're probably going to come right back down because I see NVIDIA falling right back down. But only to a point. Yeah, we just already have 2 dogs. 2 big dogs. I can't really take anymore. You know. Alright, so it looks like me cutting my short position is good. Yeah, I mean, we're up hundreds in this account already. So. I'm watching NVIDIA very closely. I'm trying to see what it's going to do. The SPY looks strong. And what I worry about is the SPY getting another set of wings, getting up close to the lifetime highs is what I worry about. You know, so I think the SPY could continue its run. But it's so hard to tell here. Definitely upward momentum right now. Tesla looking good too. Yeah, there's the upward price action. So again, we took our hands off for a little while, and there's NVIDIA start to go. Again, this could lead to the SPY lifetime high breaks ahead of FOMC meeting next week. All right, so we're gonna short this. We got 3 contracts. I just want to see if we can break down a little bit. I think we got the room for it. There we go. All right, so we just made about $30 or so just now. So we're back to flat on the day. Caught the top. We probably could have made some more from it, but that's all right. Again, we're gonna wait. Tesla's still moving up. Man, Tesla's had a very strong open, up to 232s. Oh yeah, quad witching is next Friday. I forgot about that. Again, I'm trading on Top Step X, so there's no commissions, only a small amount of fees. A great way to learn how to day trade. Most day traders lose. I'm here to tell you, do not risk 3, 4, 5 grand yourself. You're probably going to lose it if you try to day trade. I know you think you might be some prodigy savant, and that's mostly day trading marketing. Day trading takes years to learn, and most lose. And so instead of losing in the beginning thousands and thousands of dollars in your own real account, try a funded account program like Top Step. Top Step has the single best edge in trading right now, in my opinion. They give you a demo. It's $49 a month subscription. They give you a 50K demo for the base one. If you can make 3K without losing 2K, a reasonable 2-3 ratio, they fund you 50K with a 90% split as long as you follow their rules. If you fail, you only lose $49. It's not the end of the world. A great way to limit your risk. And if you're good enough to pass it and get funded, you can then withdraw whatever profit you build up after you're funded and then fund your own account. But if you lose, you're only out $49, and the profit split is 90-10. You keep 90% of your profit. You also get to keep the first $10,000 you make. And so it's a great way to learn how to day trade. And most day traders lose, but if you're good enough to pass it, 90% split, perfect middle ground of pressure. And again, the biggest edge in funding right now is that there's no commissions. I can take these small scalps with micro contracts and get in, $11, $9.50, $8, $15 loss. And the commission 70, or the commission 0, the fees are only 74 cents a trade. They're tiny. They're tiny commissions. And so again, I think that's the way. Again, we're gonna jump into this trade real quick. We go almost flat. Trying to let it roll a little bit. There we go. There we go. All right, another $20, $15, $20. We're green on the day now. And again, if you want to check out Top Step, here's the link. They are an affiliate of mine. They pay me money. I'm biased because of it. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Guys, check them out. Again, most day traders lose. I think that's the same anywhere you go. Most day traders are going to lose. It's a lot cheaper here than anywhere else, in my opinion. But again, I'm biased. Confirm everything with them. Understand CFTC 4.41, hypothetical or simulated performance have limitations. So we have gotten our last 1, 2, 3, 4, 5, 6 trades accurately green. gonna start to slow down a little bit, short the very top of this up here. Take two. Oh my gosh, I keep doing the same thing. Oh, that's a bummer, dude. I would have made money here too. Like I'm gonna bring this over here because what's happening is that I'm looking at the trade. And as I'm doing it, my mouse is accidentally scrolling up. So where instead of adding more to it, I'm covering it accidentally. Like I was correct about this big downfall. I was trying to short it literally right here. My mistake completely. And I'm green on the day. I made money, but not as much as I would have made, unfortunately. Hey, later, Jay. Have a great day, brother. Market's starting to dip some. Sorry, Pawn. I haven't even pulled up Discord today, brother. My bad, man. All right, so the eToro is going to shut down nearly all crypto trading in a settlement with the SEC. Oracle is going to pay a dividend of 40 cents. Yeah, again, I'm friendly with all of them BS, but right now it's Top Step for me. And again, Top Step has some of the best rules in the game. I was normally short these tops because we're at the top of the range, but I also think Nvidia could pump up and this could drag high breaks here. I also want to watch the SPY to potentially break lifetime highs. Let me see how much I'm actually up today. Okay, we're up some. So we are green. Alright, so we're seeing a rebound in Nvidia. Yep, there's the high break that I thought we might get. SPY broke highs too. I usually like buying these type of moves on Nvidia, but I'm gonna wait. Alright, so now we're gonna take this. We'll let the rest work a little bit. There we go. Another little $20, $30 gain. Check out this little string of green trades here. And this is when you have a bad risk reward but good accuracy system like this. That's what it looks like. Nvidia bouncing right at that previous closing price. I'm gonna short this small size one contract here. See if Nvidia starts to flush down deep under that previous close. There we go. Nice little $20 bill there. Again, there's Nvidia dropping under that previous close, so you know, again, you can kind of get into like a flow state where you can kind of understand how things move a little bit on certain days. And, you know, again, understand the context of like Nvidia is going to influence the NASDAQ. And so if Nvidia dumps under those big three milestone levels, it's pretty probable the NASDAQ short term is going to drop, right? And so that's the short term sentiment we can take advantage of there. Oh yeah, we got University of Michigan consumer sentiment today. I completely forgot. Completely forgot about Michigan sentiment today. Here, yeah, I will get the stream ready for that. All right, so yes, we got consumer sentiment data live today. I don't know how much this is going to move markets, to be completely honest. I really don't know. I don't know if this is going to be like a big move for markets or not. Look at the SPY go up. So again, I think the SPY might start to push and break lifetime highs. It's getting very, very close. Like here's lifetime highs right here, up here. And so the SPY, I mean, it's still got a ways. It's either going to hit it today or we might have choppiness ahead of FOMC. All right, so we're pulling back down a little bit again. Nvidia looking weak, but the SPY pumping up. University of Michigan consumer sentiment data drops in about 10 minutes. So it's not a crazy big report to be, in all honesty, right? So it could, you know. Got a little bull flag looking piece here. Still got a ways to go on the SPY. We got 9 minutes left until consumer sentiment data drops. Yeah, how's Intel been doing, guys? Yeah, I gotta make sure. My son's home from school today, so hold on. Okay, is your mom back home? Okay, alright, buddy. Yeah, buddy, I'm working right now, buddy. You okay? Alright, man, I love you, buddy. I'll see you in a little bit, okay? I'm almost done. Alright. Alright, let's see. Where's Intel at? Has Intel moved much? Intel's up today. It's almost back up to $20. Tesla started to turn. Had a really strong open, now coming all the way back down. I'm gonna short. All right, so we just made another 12, 15 bucks. See, the problem with the top of these ranges is that everybody's trying to look for exciting breakouts. But it's a higher probability thing to get ranges. So, you know, that's the problem, is that everybody wants super excited breakouts, and most of the time, that's not what you get. Yeah, we're up a nice amount too. Yeah, again, University of Consumer Sentiment data in 5.5 minutes. Hey, baby. No, I'm still streaming. I gotta wait. There's data coming out in 5 minutes. Okay. All right. Love you. All right. Yeah, it's hard to tell. The whole market is probably indecisive right now, waiting for the data that drops in 4 minutes. Right. So the whole market's probably just anticipating the data release. All right, guys, here we go. 2.5 minutes. 2.5 minutes. I don't know if it's going to be a huge move. It might not move at all, right? It might move. Typically, this is not the biggest report. This drops weekly usually, so I'm pretty sure University of Michigan data drops weekly. Let me make sure. But point is, it's not like a crazy, it's not like CPI or anything like that. Two times a month, so every 2 weeks is what happens. So it's every 2 weeks. Around middle of the month, final report is released toward the end of the month. So point is, it's not a super big report. It's really not. We got 1 minute. We got 1 minute. The whole market could be, but I'm not sure. All right, guys, the SPY at 561s, Tesla at 229.50s. Does anyone feel like the market is trading against your position lately? Sometimes the market feels like that. I think every trader has probably at one point been like, hey, I lose so much, why don't I just inverse my trades? Like if every time I click buy, I go down, whenever I want to buy it, why don't I just sell it and see if that works? And in some ways that can work, to be honest. Kind of shows you the traps that they set retail traders in. Anyways, guys, here we go. 10 seconds. 10 seconds. And expectations. Here's the release. 68.3 is what's expected. And 69 is what it came in at. 69 versus 68.3. 69 versus 68.3. Higher than expected consumer sentiment. Higher than expected consumer expectations. Slightly higher than expected 5-year inflation expectations, but 1-year inflation expectations were lower than expected. And the market did correct negatively to this report. So again, we did have a negative reaction to this report on consumer sentiment data. Sometimes the first move is the wrong move, but again, it came in at 69 versus 68.3. So slightly higher than expected consumer sentiment data. I'll put this up on screen. All right, so here's all the reports that just dropped. Completely flat now. We ended up dropping a lot originally, and now we're kind of retracing back up, starting to go higher. So we'll see if we hold, but yeah, that's the report. Higher consumer sentiment is kind of like economic, like a look into economic strength or weakness. The higher consumer sentiment means economic strength. Lower is economic weakness. But inflation expectations, you want to inverse that. So lower inflation is generally better. And that was mixed, though. 1 year was better. 5 years worse. Hey, later, Sam. Have a good day. Yeah, the market hasn't really moved too much. It had a big, initial, big string up and big stream down. But again, the data right there, 69 versus 68.5. 1 year inflation prelim was 2.7 versus 2.8% expected. 5 year was a little bit higher than expected. What an obscene reaction, guys. But no, again, like I said, kind of an underwhelming thing so far. Didn't really do too much. NASDAQ moved some, but we had this big upwick, big range, small reaction. So, yeah. And again, so far so good. We had a pretty good day. We have gotten into the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades or transactions in a row. Good day. We're up. I think I'm just going to sit on the green day, guys, and come back next week. Safe, sound, and healthy. Next week might be one of the biggest weeks we've ever had in terms of viewership. We might have more views than we ever had next week for the FOMC meeting, which is a massive freaking report. Next Wednesday, the cut that's probably going to happen on Wednesday of next week is crazy big. Crazy big. The reactions might be obscene. And so, hey, I appreciate the love. Y'all check out, again, I'm on Top Step right now. Top Step, in my opinion, the best edge in funding, in my personal subjective opinion. They give you a demo, test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's only $49 a month for the 50K challenge. If you hit 3K in profit on that without losing 2K first and following their rules, they fund you 50K, 90% split. You get to keep your first 10K in profit as well. And again, the best part is that if you lose, you only lose what you pay for it, in that case, $49. It's the best of both worlds. It's a limited risk, but if you pass it, similar percentage split to putting the money up yourself, 90% split. They paid out over $40 million, been around over 12 years. Great way to learn how to day trade. Almost all day traders lose, and so this is a great way to limit that risk in your journey. And if you're good enough, you can take it, pass it, build up profit, withdraw, and fund your own account. But if you lose, much less risk than losing 5K or 6K yourself, most of the time at least. Again, they're an affiliate of mine. I'm biased, but in the futures market, you can day trade the S&P, the NASDAQ, gold, some currencies. Most pro day traders trade futures. So again, if you want to check them out, here's the link. I'm going to put this up one last time. Understand, I'm not a trading professional. I could be one of the top worst traders of all time ever in the world. Don't copy me. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Understand, CFDC 4.41 hypothetical or simulated performance have limitations. Guys, market's starting to creep back up. There's the link in chat if you want to check it out. Yeah, so I'm pretty sure no. So I'm pretty sure after you activate it, it costs money to activate it, but once you activate it, yeah, I'm pretty sure the fee goes away. But I would check with them. Y'all be good, guys. Hey, I love you all. Y'all have a great day. Y'all be safe this weekend. Be safe this weekend. Have a great day. And yeah, next week FOMC meeting. Massive important week, huge week. I'll see you guys later.